Okay, it's Tuesday, February 19th, and we're trading the New York session. So just a quick update here on the euro dollar. So on the euro dollar, uh, I didn't trade this move back up only because of the fact that I was watching last week's high. So this dotted line right here, this is the 1 hour chart, by the way. This is the euro dollar. And these dotted lines right here separate the end of 1 week and mark the beginning of a new week. So when I'm looking at a trading range like this one here, maybe about 5, 6 hours ago, I'm looking at price sitting approximately in the middle of last week's trading range. So very often, the previous week's trading range, different support and resistance levels are important to me, but at different times, right? I mean, if I'm looking at price moving in an uptrend or taking out the previous week's high and it's a solidified resistance point that looks pretty important, then if it's taking out that high and it looks like it's likely to trend higher, I'm not saying that that's what it's going to do right now, but when it does, then obviously the previous week's low isn't as important, but I still need to be aware of it. So you never really know what's going to happen when it's stuck in the middle of this range here. So that's what I was thinking, and that's what I was looking at earlier in the or the late London session, early New York session. So that's what I'm more or less waiting for, is the break outside of that range, especially if the range is pretty compact where it isn't a really massive range because of a downtrend like we saw 2 weeks ago, something to that effect. So here we had some kind of consolidation here last week, and now I'm just waiting for a candle to break. So I didn't trade it into that resistance point. What I'm looking for is the continuation breakout trade, that technique. And that technique, that strategy allows me to trade the breakout when it occurs. And when it occurs, it's usually because of a political event, whatever the market's waiting for, that catalyst, that event that causes price to then trigger a reaction in the market where traders are then thinking they need to reevaluate their position. There's going to be some reevaluation in the currency pair that we're trading. And then we can trade the breakout and then the trend in the direction of the breakout, if it's all confirmed. In other words, the news supports moving, price moving in the direction of the breakout, and then these indicators. So I use 3 specific indicators on this continuation breakout trade method. I developed this method back in 2001. I've used it the same way ever since. The first indicator that I look at is the Bollinger Bands on the breakout. And then I look at the CCI, and then I look at the MACD histogram. So there really wasn't a continuation breakout trade here, but it doesn't mean that there won't be one later on in the week or later, in the next session or two. Sometimes it'll happen like that. So one of the other things that I want to be paying attention to is, based on this consolidation range from last week, that low, that high, where is price spending most of the time? Sometimes that'll give a clue if it spends most of the time in the upper half of this consolidation range. And then sometimes, with economic data, I'll get the breakout, and then that's also additional confirmation. But it doesn't necessarily guarantee anything until I get that actual breakout of the consolidation range. So I have to wait for a 1 hour candle to close above or below the resistance or support level for this consolidation, however large that range is. Now, it can't be too small. I talk about that. I'm going to be doing a webinar later this week, and we're going to be talking about the continuation breakout trade and how to quantify consolidation on a 1 hour time frame so that you can use this method. But it's extremely effective. I mean, it works 90-95% of the time. When you use it correctly, it will put you in the path of the breakout, and you can trade it, in the expected direction, again, based on the breakout, the indicator confirmation, and then whatever's driving it, whatever that economic event, that catalyst, that political statement, whatever it is that's creating that reevaluation in that currency pair, and for the market to sort of sit up and pay attention and trade it. So again, no breakout here, but I did trade the breakout here on the pound yen. Now the pound dollar. So the pound dollar is more or less moving in a different way, obviously. And I say this all the time. You can't. I get the question sometimes from novice or new traders, and they'll say, shouldn't we be trading the pound dollar and the euro dollar at the same time, more or less, or in the same direction? That isn't always the case. How many times have you seen the euro dollar drop and the pound dollar move up. And that's for obvious reasons. So they're two different countries. And to a certain extent, they're different economies, and different things are going to have an impact there in these different countries. So you've got to be aware of that. You can trade them independently, but when I get a signal like this and I can see what's driving price, what caused this move, which was obviously something from the UK, specific to the UK, and something that was specifically going to have an impact here on the pound, it gave me a perfect opportunity. So there were a couple of different breakout levels. It was this week's high, but what was more important to me was last week's high. So I had last week's high over here, last week's low. There was my continuation signal candle. Here's my trade. Now we're running into, and this was a perfect trade with the trade copier. So we're running into areas of possible resistance. So there's a few different trend lines running down here from that peak high back in at the end of January. And at this point, I don't know how much further it's going to go. These are some possible extension targets based on the retracement. There really wasn't much of a retracement from last week's low to this week's high, and then that pullback. There really wasn't much of a retracement. I mean, there's the 382. It's still in a relatively strong uptrend. I don't know where it's likely to stop. We might see a blow-off move where it might make one more move higher and then collapse. I just need to be aware of that, or is it going to continue? And I'll be looking for the larger time frames like the 4-hour. And then, of course, if it sits here and moves sideways through the close, the New York close, I'll wait until after the rollover, take a look at the daily time frame, and then see if the daily time frame is giving me better signals. And I'll review that this evening before or while when I'm making that update video to send out this evening, which would be the end of day update. So at this point, I think for the most part, I mean, we're looking at the dollar yen still moving sideways. That's last week's high. Last week's low, I'm really not going to be paying attention to it until it starts to drop or takes out that pullback here. This was Thursday, Friday, that support low at 110.24 area. I don't know which direction it's going to break. It doesn't really matter to me. I just need to wait until I get the signal. Now, it doesn't mean that I won't be trading this pair until it breaks out of this range. I could trade a reversal if it approaches resistance or support, and then trade it like a possible Tech 1 trade, something like that. That's another technique that I developed back in the beginning of my trading career. So it gives me the opportunity to trade a reversal. There are two different strategies to do that. I will be talking about those two strategies as well in this week's webinar. But right now, I'll just sort of leave it at that because there really isn't anything set up here. We'll just stay focused on looking for the continuation breakout trades across the board. And I mentioned last week, I expected that this month was going to be pretty good as far as giving us some good, solid continuation breakout trades. So far, no losing trades, and I expect more of the same and things to just get better as we go through the spring and then approach the late spring and into the summer. I think that things are going to be a lot better than they were at the end of 2018. Things were pretty choppy. The market was really suspicious of all kinds of activity, short-term trades, people scalping, reversals at really interesting levels. Brexit comments were causing things to reverse, which they still could today. We still need to be aware of those possibilities, but right now things are moving pretty consistently when we get these breakout trades.